Hi there, everybody. Let's have a look at the solution to assignment number one, Blackboard assignment number one. Lots of you did well in this. Lots of you had some challenges in there. Hopefully, you can use this to really learn what's the right thing to be doing and moving ahead. Lots of this stuff will be in your exam. So let's dive into this thing. So the first thing that we do is if you read the required here, we're going to do journal entries. If you look at the assignment, and I'll leave you to look at the assignment on your own. But basically, what you were to do was to record journal entries to start with. We needed to do some T accounts, prepare a GST return, and then a journal entry to record the GST remittance. So we're going to go through these one at a time. So January the 1st, we paid some rent, and so we paid $1,500 plus GST. So the amount coming out of our, the amount of rent is going to be $1,500. And if you do the calculation, 5% of 1,500 is $75. So that's GST recoverable. That's the account name. This could be rent expense, but it's an expense. That's the key there. And the amount of cash coming out is $1,575. It's a credit to the bank or a credit to cash, saying we're getting that out of the account. All right, furniture. We go and purchase some furniture. So we purchased it at Leon's, and we paid $24.99 GST included, and we bought it on account. So account means we're going to pay for this later, and so it's an accounts payable, and we paid $24.99 for it. Now, furniture here is a property, plant, and equipment account. It's a capital asset, so it's not an expense account. Make sure that you set it up as a property, plant, and equipment account or an asset account. So in this case, if you do the math, and the math should be $24.99 times 5 divided by 105. If you do that, the calculation of that, that's the amount of GST. So the GST in this case worked out to $119. So the difference must be the actual cost of the furniture, which is $23.80. Okay, then we take one damaged chair back to Leon's for a full refund. Well, they'll credit our account when they do that because we haven't paid for this. So what they're going to do is they're going to give us back $200 before GST. So it's a $200 credit to the furniture that we set up right up here. And the GST we get back is 5% of that. So that would be $10. So that means our accounts payable goes down by $210. We originally owed $24.99, and we're going to reduce that by $210. Okay, so now we're on to the January the 6th entry. So he stocked up on some paper and ink, paying $400 plus GST. So we paid cash, and we know we paid $400 plus GST. 5% GST on 400 should be 20 bucks. And so the total cash that we paid was $420. All right, on the 10th of January, we invoiced a client for $1,800 plus GST. And so service revenue, which we know normally has a credit balance, $1,800 plus GST. So on $1,800, the GST is $90 at 5%. And we know that the client was pleased and paid cash immediately. So they would have paid $1,890. All right, on to the next one. So on the 13th, we invoiced Joe's Consulting. So that's, and what happened here? For preparing his corporate tax return, the fee was $29.40, GST included. Okay, so we know that the total that the guy's going to pay us is $29.40, so that goes into accounts receivable. And to calculate the GST on this, it's a matter of doing exactly the same thing we did up top there. It's $29.40 times 5 divided by 105. You do the math on this thing, and you're going to find that it's $140 in GST. And the difference then must be service revenue of $2,800. And if you do the math and take 2,800 times 5%, you're going to get $140. All right, on the 18th, January the 18th, we paid Leon's for the furniture purchase, net of returned items. Okay, so we know that we had $24.99 that we initially owed them. We took back $210. So the difference should be $22.89. And so we paid them the $22.89 and we got rid of the payable then. So there you go. The last one, the last entry is collected full payment from Joe's Consulting for the January 13th invoice. Here's the January 13th invoice. We charged him $29.40 all in and he paid us. So $29.14 a debit to cash and a credit to accounts receivable. And that entry will get rid of the accounts receivable by posting it that way. So that's great. People struggled in a couple of spots here. These calculations to figure out when GST was included, to figure out how much was GST. I know there was some challenges there. Make sure you understand when GST is included that you need to do the 5/105ths. Then in here we saw some challenges here a little bit in terms of the revenue numbers. That's fine. Just remember, again, if GST is included, you got to catch that. And we had problems with account names in here. GST recoverable is fine. Another account that's used is GST paid on purchases. That's perfectly acceptable. Down here, this GST payable account. Another one that you could do for GST payable is GST collected on sales. They're both liability accounts, both work fine. Okay, then we've got the entry here this is on February 15th to pay the GST. And before we do that one, actually, we'll do the T accounts. So the way the T accounts worked out here, you should have had entries for GST recoverable, GST payable, and service revenue, because these are the amounts that we're going to transfer onto the GST return. So on GST recoverable, if you look back here, you would have seen GST recoverable here, $75. Here, let's see what we can do about highlighting these. $75, $119. We had a $10 return here, which was done actually not too bad, surprisingly. And then we had one more right here, $20 right here. So all of those accounts go into our T account here. This is how you do a T account. Make sure you know how to do it this way. If you don't, you're gonna struggle and not get the marks whenever we test this. So 20. So you have to draw the line and get the total, which should have been 204. Then if we look at GST payable here, again, we'll choose a different color here. Let's do orange, just in oops daisy. We want to do yellow on that one. So we'll go to one right here's a GST payable. We'll change the color on that one. We'll make it green instead. That's fine. So $90 there, and there's one other bill right here. We billed a fellow for $140. So those two are the only ones that you've got here. So you should have 90 and 140. Grand total should be $230. And then service revenue, let's go have a look at that. So on the service revenue, we've got a couple of those. There's one right here. I'll just highlight that in a different color. And this one right here. So the two of those, the 1800 and the 2800, go back into here. It's 1800 and 2800. And yeah, that looks pretty good. Those are the amounts that should go into the GST return. We'll do the GST return in a moment, but we'll use these numbers here to make the payment on the GST. So 204 and 230. So the GST payable account had a balance of 230 credit. So when we go to pay it, we have to debit it to get rid of it. So it's a debit here to GST payable of 230. You need a credit to GST recoverable to get rid of the $204 debit. So 204 right there, which means that we would have to pay cash or pay out $26 in order to pay the GST that we owed. And speaking of GST, let's have a look at that tax return for a second here. Let me just pull that up. Here's our GST return. There were marks for completing the name, the business number, the reporting period. It was a monthly reporting period, so just so you know, it's due the next month, at the end of the next month. And we talked about it in class, but unfortunately, not everybody caught it. Right here would have been the $4,600 in revenue. This is the $230 in GST that was collected, and right here was the $204, dollars in GST paid out. So you should have ended up with the $26 in net tax. And that was the GST question. The GST return was done relatively good. We had a couple of these transposed. Make sure you understand this is GST collected or GST payable that goes in here. And this is GST that's paid on purchases or GST recoverable, and that the net amount goes there. And don't forget to fill this stuff in up top here. You're just losing marks. You're giving marks away if you don't fill in the forms as we had suggested. Okay, so that's the GST return right there. So we'll just get rid of that. Now on to the payroll question. So on the payroll question, we had not too bad response if you got it, but if you didn't get it, there was big challenges, super big challenges it seemed, in terms of getting the right numbers in the right spot. And the dates messed a lot of people up. So, and this is just quality stuff for an exam, just so you know. In this case, we know that the required says that you had to calculate the amount of earnings you were going to have and what the deductions were using the payroll deductions online calculator. That was done very well by most people, and most people uploaded the PDF. If you didn't upload it, that's a bit of a challenge, but we needed you to tell us what your amounts were for for gross pay, tax, CPP, EI, and net amounts. And so I've used an example right here. I just threw some numbers in there, and we'll use those on the answer. But the key was to get the date right, which was January the 31st. We were paying salary for January the 31st, so it needs to be recorded in January. That's important. And because we weren't actually paying the salary until February, you needed to set up salary payable on January the 31st rather than using cash. So this recorded the employee withholdings, which was, if you look at the required in 4, you were required to do journal entries for both January and February, and you needed to catch the payment to CRA on the 3rd here as well. It's pretty straightforward in the required. So go back and read that if that didn't make sense to you. Okay, so the salary expense, just so you know, that's the gross salary right in here. That's a $5,000 debit, and we're just doing the employee portion of the withholdings. So the employee income taxes payable is the federal and provincial taxes together, which is $1,200 in this case. The amount of CPP payable comes right off of up here, which was $200. And the EI payable here would be $100. So the net salary payable should be the $3,500. And if you check to see, I think that adds up to $5,000, which is what our gross salary was. So that gets us the first part, which is the employees portion. Then, of course, we've got to record the employer's portion of this. So we know that for CPP, the employer matches whatever the amount of the CPP is. So we'd have CPP of $200. And for EI, it's 1.4 times, so it's $140. So So the total amount of the benefit should be $340 in this case. And whatever numbers you used in here, that's fine. We made sure we figured out the journal entry that it should be, and just and check to make sure you had the right numbers. Then on those both happened January the 31st. That's a real key. Make sure you catch the dates on those things. We want to get the expense into the month of January, and that's what happens here. And then the employee benefits cost, we want to get that into the month of January as well. So the expenses match with the revenue. All right, so then here we actually pay the salary. The salary was $3,500, so by debiting $3,500 salary payable, we wipe out that balance that was in there, and we pay out cash to the employee at $3,500. And then we need to pay Revenue Canada, and the date is February the 3rd on this one, February the 2nd that we actually paid that. The employee income taxes payable is just this $1,200 right here. The CPP payable is the employee's portion, the employer's portion, which is $400, and you can see it as a $400 credit balance. So to get rid of it, we need a $400 debit. EI payable was $100 from the employee, $140 from the employer, so that's $240. So the cash should be whatever those add up to, which appears to be $1,840. So we put 1840 in there for cash, and that would be the amount that would be paid to Revenue Canada. So on here, we just caught a ton of people with the dates wrong in here. So make sure that you understand that you've got to set it up in the right month, that when the employee worked. The salary payable just means we're setting up the payable. We're not paying it on the same day. In fact, we paid it February the 2nd. Separate entry in this case to do the employer portion. This is just the employee portion. And then down here, when we pay Revenue Canada, make sure that you clear out your payable accounts that had these credit balances. And you have to make sure you catch the employee and the employer's portion of each one of those. Okay, that's the solution there for the questions. Hopefully you learned a couple things from there. Yeah, you need this for your exam, so make sure that you're comfortable with all these concepts.